right? So we top ticked NASDAQ and somehow only made $400 because of risk management. All right, so getting into the day, honestly the week, you can see that we're in a pretty big range here. We've just been ranging from like this high, this low, or yeah, since like October. Haven't really broke out of either of these ranges, left both these highs untouched. We came high to breaking these highs a few days ago back in January, but it's still nothing. Yeah, so it definitely impacts the way we trade. And so we're gonna have to adapt to these type of conditions by playing more of a range-based strategy. But it doesn't matter because this is what we do. We get into the day. We were pretty. I was pretty unbiased going into the day due to the fact that honestly, just like these last few days, we have been a little unpredictable, especially with what we're going on. So definitely impacts the way market conditions have been. But overall, I was just waiting for some major form of liquidity, like a previous day high, a previous day low, to be put in and swept. And even though we have this weekly S&T from 2 weeks back, we've already expanded a lot off of it, so I wasn't too keen on longs. But anything was possible. But yeah, that's just some of my analysis from the beginning of the day. Getting into this, we have we have this 1 hour. Looking at the 1 hour, I mean, we can see previous sessions just been a lot of chop, and we finally started to break out of that choppy range a little bit. But what I'm more interested in is scaling down a little, seeing what lower time frames are doing and how we're reacting off them. So based off of open and 8:30 news, off of 8:30 news, we created this data high right here, and off open we just rip up, sweep it out, and this London high seems to be a pretty big and strong draw, and that's exactly where we draw to. So when we get into that, we're gonna see, okay, what do we have at this high? Do we have anything? What's the timing like? Because time plays a huge role in what we're gonna trade. So if we add the drawings back, we see that if this indicator back to show sessions, we see that London high is right here, and around London high we have 10 a.m. open. So what does that give us? That presents us with a really good opportunity that I called out about a few minutes before this played out. Because I saw we were nearing London High, and yes, we weren't anywhere near this London High. I thought, okay, I'm probably going to soup this high, and a soup is basically just going just a bit above this level and then rejecting straight off it. And as you see, London High is around 206.5. We go all the way up to 208.25, so it's a 1.5 point soup. Um, if that's not signs of rejection, I don't really know what is. But also pair that with this SMT on ES, and you get some pretty strong bearish price action. And that's exactly what I saw. So 10 a.m. opens, which is this yellow line we see at the 10. We soup out London High, put in an SMT, and based off this, this gives me so much confidence to go short that I enter off this 1 minute order block consequent encroachment, as you see right here by these execution marks. And why did I do this, even though we weren't below 10 a.m.? Well, one could say it's breaking my rules, but the amount of bearish confirmation that I was given from this move gave me a reason to go short up here. And you might be asking, why'd you buy back only, what, like 7 points lower? And that's because my friend told me that we didn't sweep a previous day high. So I closed out scared that we might go higher. And when we look at it, we did sweep previous day high, and he was saying, so that's very unfortunate. So regardless, I'm not going to let that tear me away from this beautiful trade opportunity. Uh, yeah, I wait till we get a strong push below 10 a.m. and then enter off 10 a.m. shorts. You can see I get filled exactly. I get filled what? I market over this because I closed out right here and I want to get into my reentry up here. So I market over this, I get a little bit higher than uh yeah, I get a little bit higher than 10 a.m. by a tick. And this trade is playing out. I take two partials here at 1800 open for 35 points, just to secure opening day on the funded, and then start chopping around. And, yeah, if we start chopping around, my main draw was midnight, which I was gonna trim 6 micros off and hold two runners down to 8:30, which is the data open. But unfortunately, what we were about 23 points away from this low before we start reversing, and I had my stop loss trimmed at this high. We make this low, start rejecting off 1800, make a nice rejection block, trim it to this high because I'm thinking, well, if we're gonna go higher than this, we're probably gonna go higher. But yeah, that was definitely an unfortunate play that I made because should I have kept just a break even stop loss, um, we would have been fine and caught the whole 130 points. Regardless, not a bad play. We still made profit on the day, got a winning day. This would have been the trade to put me at a what, maybe like $1,000 payout per account. So it's unfortunate that this is it's unfortunate that we missed out on that nice payout because we will only have one more winning day that we can cruise to after this. But I mean, this goes to show how reliable I'd say the strategy is, although the win rate isn't as high as you'd like. I mean, you're gonna catch what, 1 to 8 hour trades. Yeah, you'll catch 1 to 8 hour trades, which makes up for the win rate. And even with my win rate, I think I still have like around a 50% win rate with the strategy. So still quite profitable. Um, Even though, yeah, we made like what, $400 on the day, we would have been up like another 1200. It's all good. I mean, time and time again, I do this, so it doesn't really matter. But I just wanted to give a quick breakdown on why I took this trade and how this aligned. I didn't really touch on this fib retracement key on this fib retracement tool, but basically how I marked it out prior when I was looking for a re-entry. Yeah, once we got stopped out in profit here, we also have this 5 minute rejection block up here that's unfilled, and this 15 minute giving pretty strong bearish confirmation. So after we got stopped out, I was just going to re-enter off 10 a.m., but you can see that this level was edged by about 3 points. And how I figured out that this would be a good re-entry, it was based on this fib retracement. So we know we don't want to enter shorts in a discount and longs in a premium. So we're using this fib level to draw out the discounted prices of the range and the good areas to entry. So when we look at 0.705, we see that 0.705 is the optimal trade entry, also known as OTE. And this is about as good as a discounted price you can get in for shorts, or a premium price you can get in for shorts, and discount for longs. We can see that this practically lines up with the 10 a.m. key open. And by taking the split difference, we'll put our entry at 10 a.m. and see that this aligns very well with the range that we've been playing in. And that should we get broken past this 0.786 range, or level rather, that we would definitely, not definitely, we'd most likely be seeing price going higher. So that's why you want your stop loss to normally cover this 0.786 of the range, yeah, of the range. Even if we entered on 0.618, we would have had a little coverage, but I wouldn't be confident with this due to the fact that the 15-minute consequent inclusion of the rejection block isn't filled, and that this CE of rejection blocks is normally tapped numerous times. So that's why it's more confident putting at the start of the rejection block, which also aligned with 10 a.m. because we still have some coverage over the CE of the rejection block. But yeah, using the fib is very good for scalping intraday and catching some big scalps. Like normally, if you just use this fib with some type of sweep, SMT, and rejection block, you can catch 80 points a lot of days. I've seen it happen. Don't get me wrong, you'll lose still, but obviously the risk to reward makes up for the win rate. So as long as you win, as long as you don't lose more than four in a row, you'll make profit catching 80 points with a 15-point stop because you have this five risk reward. That means for every uh basically what you're risking to what your reward is, you're making five of your risk. So if you lose four, you make five, and you win your next one, you'll be up one risk. That's the easiest way to explain it, but it's a very simple concept. But yeah, this is the reason I took these shorts and unfortunately got stopped in profit. Um, it happens. I'll just do it again another day when the opportunity presents itself. But yeah, as a trade recap. Yeah.